Hey everyone, John Henry here, SlingshotFutures.com. Welcome to the Daily Futures Market Outlook for tomorrow's trading. Tomorrow being the 2nd of the month. Starting off March with, volatility that I don't think anybody could complain with. We've got a whole lot of movement today. And man, if you were paying attention today and following those trading rules, you probably had plenty of opportunity to work with. Now, before we jump into the charts, as always, swing it over to SlingshotFutures.com, scroll down and click on the Join the Daily Outlook newsletter. From there, you'll be able to sign up for our newsletter email list. You'll be notified every time one of these videos comes out. Along with that, in the video itself, we talk about all kinds of things that we just don't have time to talk about in the video, which we go over in the email. And that's going to be everything from stocks, Forex, crypto, anything of interest that's setting up that will be in that newsletter. So make sure to sign up for that so you don't miss anything ever again. Along with that, if you haven't done so already, click on the live trade room subscription and trial info where you can sign up for a free 3-day trial with us in the live trade room. It's a good way to kind of get your feet wet a little bit, hang out with us for a few days, ask some questions, and just kind of see what we're all about in a live environment. So a really good way to kind of hang out with us and see what we're all about. So jumping on in, as always, starting off with the euro. Now, the euro, man, what a bounce off of that level of support. Now, we didn't quite make it all the way down to the lows, which we really wanted to see, but overall, we have a very strong bullish move off of the bottom. And one big thing to note here is the really heavy miss on the bottom of the channel. They didn't even come close. So with that big miss on the downside, along with the fact that we're coming off of a major area of support, if this does continue to spike higher, we might be in for quite the blow-off on the highs as well, usually about equidistant to the miss down here. So if we measure this up to the bottom of the channel, we're looking for a miss of about that size on the highs, depending on where they break out. Let's just say right now, we'd be looking for a breakout up, just eyeballing it, around 23,500, 23,550. Now, the overall movement that we're getting is obviously very bullish in the short term. We are coming into the top of the bear channel, working its way lower, and we are finding some profit taking coming off the table here. Not a big surprise. But the one thing that we do want to keep in mind here is that, well, we are kind of potentially in a range. We tried breaking out above the highs, didn't do so well, so they pushed the market back down to the lows, and the market went and tried to break down through the lows. They didn't do so well there either. So this breakout to the upside could be nothing more than just the market regaining its step back into the range and off to the highs we go, where then we probably just go sideways and come back down again and kind of rattle around a little bit. So there are some definite levels that we want to keep our eyes on here in terms of range lows. Now, looking across here, you know, best fit really is kind of what we're looking for. It doesn't have to be perfect, but a range low does seem pretty good at around 22,545. We had a lot of really nice holds inside of there, a double bottom with a quick little trap low, reversal back up. I mean, it fits the bill in what we're looking for. Now, in terms of the highs, we have another situation of, well, you know, it doesn't have to be picture perfect, but an area inside around 25,295 does look pretty good. Tried breaking above the highs by just a little bit, fading back down, but we can see all these wick tests in here do further confirm this level. So that looks pretty good, and that's likely going to be the range that we're going to have to deal with. Now, middle of the range does fit really well, still at 23,695, so that level doesn't change. But we're breaking back above inside the range, and a lot of times when you see that happen, they try to break out, it fails, and it runs back up. You'll see the market bounce off of some other form of resistance. In this case, we have the other wedge tops, but then it will want to come back and use that level as support, and that's really the bull bounce that we want to see as confirmation, as long as it comes on some strength. If we see something like this, we could definitely be looking for a big rally to the upside. 23,695 would be a medium target, with the upside objective being at around 25,295 or higher, maybe even to new highs. So it is kind of a waiting game. You know, in the overnight session, I'm anticipating this bullishness to at least go sideways to up for continuation, especially with a miss on the lows. It makes a lot of sense to see further bullishness from the buyers off of that level of support. If we can get another dip down over the next couple days to a new low, anywhere below 21,655 down to the support low at 21,410 is going to be an area of interest. So for right now, we're cycling off of support and anticipating the bulls to continue. On gold, we have a kind of a miss, right? They came in a little bit early, and then they came in a little bit late, but didn't actually quite test it perfectly here. We do have a low channel test, and we do have that dip low at the bottom of the wedge. So everything is coming together, just not as perfectly as we wanted to see it. It's a little bit late to the party. Not necessarily a bad thing. We're still maintaining the cycle to the downside. We have a 1, 2, and 3 point channel. The 4th point is confirmation, and it looks like it's being confirmed pretty well. I can't say that that looks bad. So with a nice bull spike to the upside, there's one big level of resistance that the buyers are going to have to work through in order to really prove that they want to come in. Now, if we look at price, we can see that we had a big spike down, into somewhat of a spike and wedge or spike and channel type formation. And very frequently, when the market comes back to those high points, the high that was made right there, that's the do or die. Either we're going to run into it and come crashing back down again, back to a new low, or the buyers break out above it and we use that as support to continue the rally to the upside. Right now, we are in a bear channel, and we are relatively range-bound in the bigger picture over the past, well, since kind of the beginning of, really since probably the, beginning of January. We've been kind of stuck inside this range. It hasn't really been able to do a whole lot. Now we're at the lows of it. Chances are buyers are trying to pick up some long-term prices on some cheaper prices for those longer-term holds to see if they can get a rally back up towards the highs. It's a beautiful move if they can get it going. It's just a matter of seeing the buyers really break through some of this resistance and prove that they want to start pushing. We have a good start. Now they need to follow it through. Over on crude oil. Crude oil holding that bottom edge support at 60.75 really nicely. They dipped underneath it by just a little bit, but overall, with a rally back up, more than enough for a one-to-one type move off the lows, if not even a little bit further. So one thing that I always like to look at is, from that point of interest right there, at that range zone, they dipped down to a low of right there at 60.18. If we open this up, and of course it's never 60.18, it's one tick past that, so 58. But if we look at that and put a one-to-one move on, which is 58 and 58, well, that's a pretty good move. It's a 58-cent move based off of the actual risk of that breakdown. So buyers who bought into this, they've already been able to take off profit targets really easily. It was an immediate bounce right back up. You can see as soon as that first candle came down into it and hit it here, the next candle popped up all the way into that one-to-one area of resistance for targets. So we know that buyers at the very least have been able to have a chance, they may not have taken it, but have a chance of getting a one-to-one. So the next area that we have to kind of keep our eyes on is potentially going a little bit further than that, right? What's the next stop above a one-to-one? Well, that would be a two-to-one, and at 58, that would be 116. So the next target objective for buyers who bought down here, looking for an actual risk to target area of a 2-to-1, they're looking for $1.16 to the upside off of that 60.75 level, which means 61.91 is the next area of resistance that we're kind of looking for. Now, not to mention that the fact that we have a 2-to-1 target objective for buyers who bought into this dip, we also have a situation where that is kind of the top of that little bounce that they had. And a lot of times sellers will defend those kinds of areas initially. So we have a lot of selling that's likely going to be taking place at around 61.91. As low, I mean, you could mark the top of that candle at 83. But between 83 and 91, that 10 to 15 tick zone is going to be where a lot of selling comes in. And that's both buyers taking profit as well as sellers trying to come in and shove the market back down again. This is a really strong pair leg lower, and they might be looking for any excuse they can get their hands on to try to drive the market back down. Other than that, everything looks pretty good. Buyers are obviously pretty happy. They've already had a one-to-one to move up, so they definitely can't be upset. And it looks pretty good for a good shot at getting that 2-to-1 up to 61.91, and that would also be the trap high in that earlier little pause. So 61.91 is definitely going to be a hot spot going into tomorrow's trading, and that might have enough repercussion to try to drive the market back down once again to reattempt 60.75. 60.75 has already offered up a beautiful level of support, and it's already worked out very nicely. The next option could be possibly a 3-push wedge bottom. Now, depending on when that fires off is going to be dependent on the price. But let's say they go up, fill that 2-to-1, find sellers, and drive back down. That would put price at around the $60 mark at that point in time. So it's a relatively shallow low, and likely buyers will begin coming in underneath that bottom, along with everything else. But the buyers have already had a 1-to-1 move up based on their actual risk. Now it's time to see if they can get a little more juice out of it for that full 2-to-1 move up in the overnight. Anticipating a little bit more bullishness to likely sideways movement as we go into the overnight session. What I would really like to see is a rally up to 62.85, and then from there use that as resistance. Support level didn't hold. Looking to use that as resistance to drive the market back down. I still think that we have a slight bearish tone in this. Buyers are really showing up. They're trying to hold these lows very aggressively. But this is a pretty heavy pullback, and that is potentially the start. I mean, we may never see this low again, but that is it's hard to ignore this amount of bear slide off the top. If I'm going to believe the buyers, I'm going to want to see a very obvious reversal that the buyers are coming back into play the market to the upside. For right now, though, it looks like we might have to wait a little bit until we get that information. So going into the overnight session, expecting a little bit of upward momentum to continue to try to get that 2-to-1 objective and the trap area. Might not make it all the way, but again, between 83 up to 91 is going to be the area of resistance to try to drive the market back down again. And then over on the S&P coming in and trapping that low as well, 2682. They did have an initial bounce all the way up to a high of 2688.75, so a good, 5 or 6 points bounce there. Really nice bounce overall, but they're not really holding it as well, especially not compared to crude oil. Crude oil just absolutely smashed right up and slammed into the target area for a 1-to-1. Not so much the case for the S&P. Now, they might not be done yet, to be fair. I mean, if we're looking at crude oil, they did dip below it for a little while, and to be honest, this looks like a pretty close similarity to the S&P. We have a big, strong bear bar down, a weak bull bar that kind of completes the objective, and then a little bit more follow-through. If we look at the S&P, well, we have a big, strong bear bar down, a weak bull bar. Are we going to see one more bull bar up to complete the upside objective for buyers buying into 2682? It definitely could. Now, looking at the level of support there, we can mark this same thing up here and kind of see what we're dealing with. Now, the stop level is at 94, so we're looking at 94 here as well, and that means that an upside objective for the buyers is going to be at 27.05 1/4 based off of so far how far they have slid through that swing low. Now, is this the only swing low that we want to pay attention to? Just like we talked about yesterday in the Outlook video then, not necessarily. There are a lot of other swing lows that we could keep our eyes on as well. It's just this one lines up really nicely with that earlier trap, and I want to see their response to it. So far, it's not been that great. So we need to see a little bit more follow-through. Otherwise, we're anticipating that this is nothing more than just a big bear engulfing candle that nobody wants to sell underneath. The likely belief is that most of the move is already done. It's gone this monstrous bear engulfing candle. You don't want to sell at the bottom of that. There's no room for the trade to work anymore. So a lot of traders will wait for an intra-candle pullback to start selling into. Now, intracandle pullbacks can generally be anywhere from 50%, 38%, depends on how aggressive they are. But if we measure up that candle from the top to the bottom and we look at an area of interest, that gives us a 50% pullback at 25.94 3/4, and that's going to be an area where a lot of sellers will begin trying to pump in and drive the market back down again, who don't want to sell way down here. They want to sell a slightly better price. So, as we can see, the buyers definitely have a lot of work cut out for them if they're going to keep this going to the upside. But, for the most part, we're trapping a swing low. Likely we're going to get at least a little bit of bouncing, and it would make sense to see this push up to at least a 1-to-1, and that's about 23.5 points to the upside from that low, so it might take a little while. Aside from that, though, anticipating slight range-bound to slightly bullish movement, assuming that sellers just don't want to sell that far down. They're looking for some better prices, and that's kind of on the same boat as me. Really don't want to sell that far down. I hate selling after engulfing candles because there's just usually no room for the trade to work anymore. So that's going to do it for the Outlook. Plenty of movement today, all kinds of movement today. Man alive, these are the kinds of days that I love because we actually have something to work with, right? There's something that we can actually trade and have some good movement. Now, looking at tomorrow's news, ooh, man, there isn't much. We don't have a whole lot of news to work with at all. Now, looking at the news calendar, it's pretty sparse, especially for the U.S., considering there is nothing. But let's pull it up really quick here, and we'll take a look. All right, so there we go. We got the news calendar on the screen. Now, I mean, man, for movement, it's a little bit of a tough situation. We've got a lot of UK news. There's nothing for the U.S. that we really have to worry about. So for the news tomorrow, all we have is news out of the UK. Tentatively throughout the day, we have, at some point, UK Prime Minister May speaking. At 4:30, we have the construction PMI for February, forecasted at 50.5. And then, again, out of the UK, because it's the only country with any news going on tomorrow, apparently. We have the Bank of England, Governor Carney, speaking at 5 o'clock tomorrow morning. Nothing to worry about for the US session once we start going into 8, 9 o'clock. All the news is already done. Sure, there's going to be small to medium news announcements, but nothing big to really move the markets around, so it's going to be a pretty calm day, especially after all of the volatility that we saw today, and then going into tomorrow with no news at all. Chances are we're going to have a pretty slow one tomorrow. Obviously, I'm hoping that is not the case, but it is something that I am definitely prepared to deal with, because it does kind of make sense. So that's going to do it for the Outlook. As always, it doesn't matter what market you're taking a look at, whether it's crude oil, the S&P, spiders, it doesn't matter. Always, always, always make a plan, trade a plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.